Yeah, we are live in YouTube now. We can start the meeting.
Okay. Hello, good evening, everybody. We are just about to commence yet another webinar today, the second of such webinars for the current year. The topic today is quite relevant to us, the bankers in particular, and to the public in general. It has become the buzzword in current situation among bankers and among the customers. Transformation from traditional banking to digitalization, without which no bank would be able to survive in the long run, let alone short run. Though some of us have experienced and have witnessed the transformation that digitalization has brought in, we believe most of our bankers and customers have made only few steps in that long journey. Or rather, may I say that some of us just started the journey. In that long journey, there are many more milestones that need to be achieved. Much effort and many thoughts need to be put in. Many aspects need to be addressed. And this webinar is an effort made by the APB to give guidance to our audience to tread in that path successfully. So let us give the due respect to the APB anthem before starting the session. The APB anthem will now play.
Professionals, we are committed. Since 1988, we stand united. Our loyalty is with integrity to what is best for our community. We are the members of the APB, serving all who are in our society. Be they wealthy, be they meek, what's best for them we'll see. Standing firm for all that we should be. What's good for banking governance? Learn the rules and give them prominence. Let's make sure of what is truly right. They will be the trusted light. We are the members of the APB, serving all who are in our society. Onwards to the future, we do ascend. With challenges and tests, we shall contend. By building on the strength we uphold, with bankers' ethics, we'll be bold. Empowering professionals, we are committed. Since 1988, we stand united. We stand united.
Thank you. Let me invite the president of APB, Mr. Rajapaksha, to address the audience with the welcome speech.
Good evening. Warmly welcome all participants, APB members, and also especially our the today facilitators, Director Payment and Settlement, Mr. Kumar Tunga, and Mr. P. Senaratne, Payment and Settlement of Central Bank of Sri Lanka, and also all the other members and other participants for this webinar. Actually, this is, the very important topic for the bankers, especially the digitalization has highly affected to the banking industry. So now, without having the digital platforms, now we are unable to be in the banking industry with competitive banks. So with competitors, I think Mr. Kumar Tunga and Mr. P. Senaratne will contribute more for this, more their knowledge and their experience to the participants. And also now, at present, I think we are calling digital labs and biometrics and face recognition. Some bank they have open accounts in digital platform with digital signatures with face recognition, and also some process. The loan approval process or any application for any other product. They all are in digital platform. So with that, now most banks are from the core banking to digital platform, as this is a national, the requirement. In addition to that, now the country is going to have transit cards, touch and go. So there are now from the banking sector further moving to the society, not only the bank customers and also to the normal passengers also for this digital platform. In addition to that, I know the most of the banks now they are moving to new cash deposit machines, and they are talking bitcoins, blockchains, cryptocurrency. Now those are the words at present they're talking in the banking industry. In addition to that, Bitcoin ATMs are quickly become more common in some countries. The increasing trend to make payments business and individual priority through the digital platform. So we have to explore the innovative processes for online and mobile banking that include, the unique apps. So first, we have to build the security and the customer trust for these products. I think Mr. Kumar Tung and Mr. Senaratne will give their, the value additions for this seminar. I thank you to the CPDC committee organizing this very important webinar for the industry at large, to the all customers. Thank you. Over to you, Ms. Christie. Over to you, Christine. Jeremy.
Can you hear me?
Yeah.
Hello. Thank you, Mr. Rajapaksa. Thank you very much. Let me now introduce our eminent personalities today to take you through the journey of digitalization. Today, we have two eminent personalities who need no introduction to this arena. However, let me formally introduce them to you for the wider audience. We have Mr. Purna Senaratne, who is currently a member of the Payments and Settlements Department of the Central Bank of Sri Lanka. He has obtained his bachelor's degree in Electronic and Telecommunication Engineering from the University of Moratuwa and his master's in Business Administration from the Postgraduate Institute of Sri Lanka, the PIE. He is an associate member of the Institute of Engineers, Sri Lanka, and a member of the Project Management Institute of USA. He carries a combination of knowledge, both in the technology arena and business management. Young Mr. Purna has had to his credit more than 6 years of work experience in the IT and telecommunication sectors, specializing as an engineer and a project manager before joining the central bank. We also have the second resource person who needs no introduction to the bankers. I wonder whether his name has become synonymous with digitalization of banking. We speak of him so much these days. Okay, he is none other than Mr. D. Kumaratunga. Mr. Kumaratunga is the Director of Payments and Settlements at the Department of Central Bank of Sri Lanka. He has more than 30 years of experience in central banking and has worked in several departments in different capacities, including the Economic Research Department and the Information Technology Department. Mr. Kumaratunga has obtained his MA in Economics from the University of Essex, UK, MSc in Information Technology from the University of Colombo, the School of Computer Science, postgraduate diploma in Economics from the University of Essex, UK, postgraduate diploma in Information Technology from the University of Colombo, and an honors degree in BCom from the University of Peradeniya. So we will have a Q&A session at the end of the presentations, which will be moderated by Mr. Jeremy De Silva, Senior Vice President of APB, the DGM of Internal Audit at Pan Asia Bank. So let me now hand over to Mr. Senaratna. Mr. Senaratna, you may start your session.
I hope you all can hear me.
Yes.
Right. Thanks.
Can hear.
Right. Thank you. So thank you, Ms. Christine, for that kind introduction, and also APB for having us here tonight for this session. So in this first part of the presentation, I'll be talking to you about the topic of cryptocurrencies. Now, like Ms. Christine said, I'm Purna Senaratna. I'm from the Payments and Services Department of the Central Bank of Sri Lanka. Cryptocurrencies is a very popular topic these days, especially in 2021. Right, there's been a lot of discussion ongoing as to the relevance of cryptocurrencies for the bankers as well as for the general public. So I'm sure some of you may know a couple of things about this topic as well. So in this presentation, what I will try to do is to build up a bit of a structured approach that you can use as a foundation for your further references on this big, vast topic. Right. So one of the most important things about studying about cryptocurrencies is to be able to classify it, right? So where does it fall among other types of money, right? So in order to explain this classification, I'm going to use a model called the money matrix, which is developed by the European Central Bank. Right. Okay. So in this classification, the money matrix uses 2 dimensions, right, to classify different types of money, different forms of money, right? So the first dimension is the legal status of money, which means it's either regulated or unregulated. So the unregulated section also breaks down into 2 parts, either centralized or decentralized. Right. I hope you all can hear me now.
Yeah, we can hear properly.
Right. So, okay. So basically, I was talking about 2 dimensions through which money, any form of money, can be classified. Right. The first one was the legal status. So we have regulated money as well as unregulated money. Regulated means there's a particular regulator who oversees the different aspects of regulation with regards to that money. On the unregulated section, we have 2 types, centralized versus decentralized. So we'll talk a bit about decentralized later. On the other dimension, we've got money format. Basically, this speaks about the difference of physical versus digital money. Right? Digital money also breaks down into 2 types: the ones that use cryptography, the ones that don't use cryptography. Right? So in the money matrix, you can see here some of the more famous types of money, like notes and cash, e-money, decentralized cryptocurrencies, coupons, things like that. Right? So this is how we're going to classify different forms of money. And Another important distinction I want to make here is the difference between digital currencies, virtual currencies, and cryptocurrencies. Right? So a digital currency is essentially a digital representation of any form of money. So this can include either fiat money in the form of electronic money, or it can also include virtual currencies. Virtual currencies, on the other hand, is a subset. It's a type of digital currency which is unregulated. Right? So what this unregulated means is that it is not issued by a central bank, or its value is also not guaranteed by a central bank. For example, if you think about the US dollar or even the Sri Lankan rupee, it is regulated by either, in the US case, it's the Federal Reserve, in the Sri Lankan case, it's a central bank. Right? This is not the case with a virtual currency, which is unregulated. Thirdly, we come to the topic of cryptocurrency, which is a virtual currency that is also decentralized and based on cryptography. Right. So what this decentralization means is that control of the currency system is actually decentralized, which means there is no single entity in the middle that performs the transaction validations or new coin generation, things like that, that are usual tasks that are in a currency system. Right. So that's how we define cryptocurrencies. And as of early this month, there are about 10,749 recognized cryptocurrencies in the world. Right. So this is the basic classification of a cryptocurrency. Now, when you talk about the evolution of cryptocurrencies, we will definitely have to talk about the journey of Bitcoin, because Bitcoin is the first cryptocurrency that was ever introduced to the world. Right. So this happened in 2008 when a person named Satoshi Nakamoto introduced this white paper with the title "Bitcoin, a peer-to-peer electronic cash system." Right. So the identity of this person, Satoshi Nakamoto, is still unknown. We don't really know who this is, or whether this is a group of people, not known yet. But when you look at the white paper that he presented, you can identify some of his initial motivations. Right. So the idea was to produce a currency or a means of payment that is independent of any central authority, which means there will be no bank or a central bank in the Bitcoin system. Right. So this currency will obviously be electronic, and the transactions will have to be instant and with low transaction fees. Right. So that's what he envisioned. And also the currency supply will be limited, which means there will only be 21 million Bitcoins ever in the Bitcoin network. Right. So the idea was to produce a currency or a means of payment. But when we come 12 or 13 years into the future, that is today, we can see that Bitcoin has indeed changed its narrative. Right. Now, this study that was done by the popular US investment bank called Morgan Stanley, they presented the argument that Bitcoin started as a digital cash, and now it has become what they call an institutional investment class, which means these big firms, big institutional investment banks, and entities like that are now actively involved in Bitcoin investment. So the same idea is also presented in the timeline shown here. Right. So the idea is that Bitcoin has changed its narrative from a payment instrument to an investment instrument now. Right. So if we talk about the current picture of the cryptocurrency world, as of early this year, the global crypto market stood at a total value of 1.38 trillion US dollars, which means to combine all the value of all the cryptocurrencies in the world, it would amount to about 1.38 trillion US dollars. Right? And the 24-hour daily trading volumes stood at about 85 billion US dollars. Now, in comparison, you can think about the Sri Lanka's GDP, which was about 81 billion in 2020. Right? So the transaction volumes are huge. In this snapshot, you can see the 7 most popular cryptocurrencies in the world, which also includes the famous names like Ethereum, Cardano, and Dogecoin. Right? We talk about the crypto world, the love of Bitcoin remains very strong, which means Bitcoin has a market dominance in terms of the market share of about 46.76%. And there was this recent survey done by a global institution where they identified that about, if you consider 100 people who own cryptocurrencies, about 65% of them actually own Bitcoin, which means almost 2/3. Right? So the love for Bitcoin remains strong. When you talk about Bitcoin specifically, you can see the price variation of Bitcoin during the year 2021. price variation, the Bitcoin price actually took a very dramatic behavior in this year. As you can see, it's like a roller coaster ride. Sometimes the price went as high as about $62,000 US, and within a couple of weeks, it fell down to about 32,000. So the price variation of Bitcoin is very apparent in this chart, right? But still, Bitcoin remains the most favorite son in the cryptocurrency family, right? So when you talk about the impact of cryptocurrency, we need to identify what are some of these use cases, right? Why people want to buy cryptocurrency. A recent global survey on 2021 actually asked this question: why people are buying cryptocurrency? So the top 3 results included the first one being as part of a long-term strategy of the investors. So that was the most popular reason. And the next reason is as a result of the distrust in the current financial system. And thirdly, the third biggest motivation was to treat cryptocurrencies as a short-term trading opportunity. Right? So the idea that comes out of this result is that Bitcoin or other cryptocurrencies are treated more as an investment instrument than a means of payment, just like what Satoshi originally wanted. It is not the case anymore, right? So the diagram below also shows some of the other reasons as well, other than the top 3. You can see a fear of missing out, or another reason could be the chance to moonshot. So these are basically terms in the investors dictionary, right? So the idea is that cryptocurrencies are more and more popular in the investors domain. Okay, so when people use cryptocurrencies, definitely they will incur they will have to face some of the risks, right? So what are these risks? One of the major risks that are posed by the behaviors of cryptocurrency is what we call the price volatility, right? So cryptocurrencies show extreme price volatility, and because of that, less and less predictability, and their value is also susceptible to external forces, right? For example, a famous celebrity can tweet something about a cryptocurrency, and it can have a huge impact on its price. In fact, this is what happened in 2021. One of the reasons for this 2021 crypto market crash that happened in May was related to the famous celebrity Elon Musk, right? So the market basically lost about $1 trillion US value, and it dropped down to about 1.5 trillion from about 2.5 trillion. So $1 trillion US value vanished like nothing. So I don't know if you can see the graph on the right side. So this collapse is shown in that right side graph, right? So price volatility is a huge risk that can cause basically a loss to the investor, right? And lack of cryptocurrency knowledge and proper knowledge sources is another risk, because cryptos come with a steep learning curve, and there's always this risk of losing money when an investor invests in something that they don't sufficiently understand, right? So that risk is also there. Scams and frauds are a very threatening scenario in the current crypto world. The United States consumers, starting from 2020 October, for about 8 months time, they reported having lost about 80 million worth of their funds related to crypto-related investment scams. Right? So these scammers usually tap into people's willingness to get rich quick. So sometimes people do that. So they exploit this vulnerability using things like websites, fake mobile apps, or social media and email campaigns. But scams are a very real threat at the moment, right? So obviously the technological risks will also be there. Lack of proper security or privacy measures would expose the crypto user, not just the user, crypto exchanges as well. Right? They are having instances where crypto exchanges got hacked, right? So that's a technological risk. Another thing about cryptocurrencies is that once a transaction is done, it's irreversible, which means if some fund is lost, it's really impossible to revert it back, right? So that risk is also there. And among all these, lack of protection is another critical risk, because investors will have no regulatory or legal recourse in the event of a user or a transaction related issue or a dispute in the country. For example, if you consider conventional or regulated financial institution like a bank or a non-bank financial institution, there are certain safety nets in the protection for the protection of consumers. But due to the fact that these entities are not regulated under Sri Lankan laws, there's a certain lack of protection for the user. So these are some of the risks that crypto enthusiasts need to understand and keep in mind. The list goes on, but these are what I thought were some of the more important ones, right? So I want to quickly talk about one popular crypto scam and one popular cryptocurrency hack, right? So this scam was what we call the plus token scam. This happened in about 2019 in China, Korea, that region. So essentially what happened was plus token was marketed as a crypto wallet. Yeah, people were motivated to buy Bitcoin and Ethereum and convert it into this fake coin called Plus, right? And they were promised very high returns on their investment. So a lot of people got attracted to this, but eventually the admins of the platform just ran away, closing down the operation with about 3 billion worth of Bitcoins and Ethereum, right? So that was a huge loss. You can see that they hosted these big events, extravagant events and everything in order to attract more and more people in the region. But the careless nature of some of the investors eventually cost them a lot of money, right? So that's the plus token scam. I want to talk about this CoinCheck Japanese exchange hack, which happened in 2018, where this crypto exchange was hacked with a virus, and they eventually lost about 534 million worth of NEM coins. Right? So the snapshot shows there are two top executives having to explain this hack. So this is also considered as the biggest theft in the history. So you can see that there are a lot of massive scale scams as well as massive scale hacks. So this is just to illustrate the criticality of the aforementioned risk. Right? We talked about some of the risks to the users, but there are certain other challenges that an economy faces when more and more users or citizens start adopting cryptocurrencies. Right? The first one is the challenge to prepare economic statistics. Now, the starting point of all economic, what we call stewardship or even regulation, is the measurement of activity. Right? We have to measure something in order to manage it. But when more and more people start using cryptocurrencies in these virtual economies, it will be really hard to capture these transactions and economic data in order to prepare a country's statistics. Right? So this challenge will be there for the agencies who are preparing these economic statistics. Price stability is another challenged area. Now, when there's an alternative and ungoverned form of currency like a cryptocurrency in the economy, authorities cannot fully achieve what we call the price stability, basically a low and stable inflation, right? So this is usually achieved by controlling the supply and the cost of money, which is also called the monetary policy of a country. But when there's an ungoverned form of currency which is not within the control, the effect of the monetary policy deteriorates, right? So as a result, price stability of a country can be highly challenged. Exchange rate complexities will be obviously there because foreign suppliers may prefer one currency over the other as a means of payment, which means they can prefer the virtual currency over the conventional currency. Right? So there will be two exchange rates, and this new exchange rate with the virtual currency will have to be closely monitored, which is an additional burden to the regulators and it's a challenge for the economy as well. Tax leakages will be there. For example, if more people start using acting on the virtual economy, these transactions will disappear from the conventional tax nets, right? And tax, we all know, is the biggest form of revenue for a government, which will eventually be used for the well-being of the citizens. So tax leakage is a huge threat to the economy, right? So once again, the list has some other challenges as well, but these were some of the more prominent ones. There's this particular challenge for the law enforcement authorities as well, because there are a lot of bad people in the world, right? And these bad people are attracted more and more towards cryptocurrencies in working on their illicit schedules, right? So you can see some of these bad guys, scammers, people who do terrorism financing, sanctioned countries, darknet material, basically people who sell things like drugs and weapons on the darknet markets. So things like entities like that they are growing their interest on using cryptocurrencies for their bad work. Right? For example, in 2021, rather 2020, about $10 billion worth of transactions have been reported as illicit activities. Obviously, this number will grow when more and more cases gets uncovered, but these are the immediate figures. So top receivers included scammers, darknet material operators, as well as ransomware producers. So this is once again a huge challenge for the law enforcement authorities. And obviously, this will be related to money laundering as well. I want to also talk about some of the regulations of cryptocurrency related things, some of the global examples. Right? So the first example is from El Salvador. Now, El Salvador is a Central American country which made Bitcoin as their legal tender. So this is the first time in the world where a country made a cryptocurrency as its legal tender. So their motivation was a lot of El Salvadorans were living outside the country, and they were sending a lot of foreign remittance back to the country. So the argument was that Bitcoin was seen as more efficient than the existing remittance mechanism. And also, it was reported that about 70% of the El Salvadorans were unbanked, which means they also wanted to improve their financial inclusion objectives, achieve such objectives through this new venture, right? So currently, their government is incentivizing people to work with Bitcoin. The USA scenario is somewhat different. Regulations are there at both federal and state level. USA is a federal country. So if you consider federal agencies like FinCEN, they consider exchanges as monetary transmitters. So the existing laws for money transmitter. So the existing laws for the money transmitters would apply to crypto exchanges as well. In the case of Inland Revenue, they consider cryptocurrency as a property. So this is subjected to taxing. So likewise, there are some federal agencies who have come up with national level regulation. And of course, individual states are also free to introduce their own rules. Right? So that's the case with USA. We want to talk about our neighbor India. The case of cryptocurrency in India is, as they call it, has an uncertain future. Right? So in 2013 and 17, the Reserve Bank of India warned the Indian citizens of some of these risks related to cryptocurrency. And they went a step ahead, and in 2018, they banned all the banks and financial institutions from working with crypto-related businesses. But later, this decision was reverted by Indian courts. But in 2021, once again, the government is trying to introduce this cryptocurrency and regulation of official digital currency bill, through which it is speculated that they will ban all the private cryptocurrencies, as well as introduce their new what they call the central bank digital currency. Right? So the Indian version of the central bank digital currency. So that's Indian case is actually pretty interesting. On the other side, we have China, which is what we call a complete crypto crackdown, which means in 2017 and 19, the Chinese authorities shut down access to all local and foreign crypto exchanges, as well as ICO websites, initial coin offering website. And they went like 10 steps ahead in 2021, where they imposed almost a blanket ban on crypto, where banks and other financial institutions are now prohibited from working with crypto-related businesses. Institutions no longer can receive payments in cryptocurrencies, and they are now actively trying to curb what they call the crypto mining, which used to be a very famous activity in China, as well as they have blocked the search results in their search engines and social media that is related to crypto exchange. So China is a complete blanket ban on crypto. Right. So the idea is that different countries take different approaches when they are regulating crypto-related businesses, as well as use of cryptocurrencies. So we'll take a quick look at what Sri Lanka has done so far. So the Central Bank of Sri Lanka has been on a journey to increase the public awareness of some of these risks related to the cryptocurrencies. So in 2018, and also very recently in 2021, CBSL issued 2 press releases in which they detailed about the risks that are out there for the general public when they are exposed to the crypto world, right? So that is one measure that have been taken. And if you are close to the crypto world, you might recall that you cannot really use your credit or debit cards to purchase cryptocurrencies in a crypto exchange, right? So that is as part of Sri Lanka's foreign exchange laws, right? So there's a particular foreign exchange regulation which prevents these card issuers from allowing transactions related to the purchase of cryptocurrencies in crypto exchanges. So these are a couple of cases, a couple of measures that Sri Lanka has taken so far. And going forward also with more knowledge and more use cases, obviously there will be new regulations in the times to come, right? So those are the Sri Lankan scenarios. Now with that, I come to the conclusion of my presentation. The general message that I want to deliver through the presentation is that while we can be a crypto enthusiast who can appreciate the technological advancements and some of these, alternative financial systems that have come up, we also need to have a balanced approach in understanding the real risks that are related to the crypto world. So having that balanced approach with a proper understanding of the risk is very important. So with that, I would like to conclude my presentation. Right. Thank you very much.
Thank you very much, Mr. Senaratna, for that elaborative explanation on the cryptocurrencies and the regulations relating to Sri Lanka. The next presentation we have Mr. Dharmasiri Kumaratunga, Director Payments and Settlement of Central Bank of Sri Lanka, who will talk on the transformation from the traditional banking to the digitalization, and he will highlight on the key aspects that the central bank has initiated during the year in moving the payments and settlement to a more digitalized environment. Over to you, Mr. Kumaratunga, for your presentation.
So thank you very much, Jeremy and Ms. Rajapaksa, Ms. Christine and Jeremy and Mr. Isuru and all the other members of the Association of the Professional Bankers of Sri Lanka. And thank you very much for inviting us to have this valuable and timely discussion on how we as bankers can proceed with the digitalization in our industry. We know that so past few years we have developed with the support of the Lanka Clear and also the bank introduced some of the digital solutions. And those systems are open to all the banks. And some of these things I have not included here, like a pen, transit card. Some instruments are not included, but what I want to highlight here is that so we introduced SEFT in 2015, and 6 years back with the maximum amount is 5 million rupees can be transferred using the SEFT. And up to now, when we are doing the research and collecting data from the banks, we know that some banks are not allowed up to the required amount, and most of the banks are allowing only 250,000. And also, if we want to do some 1 million or 2 million transaction, then of course we have to call the bank and make some arrangement. But some banks are allowing to do this 2 or 3 million transaction per day. And also another highlight I want to make from this chart is a JustPay. JustPay we started 2017 and 10,000 rupees maximum. And last year we have increased to 25,000 and now it is 50,000. So this one also I want to request from the banks. We are ready to go for the digital environment. Then we have to work all the members in the one group and the community. Then to support their own customers when we are starting journey from 1993 and before that, credit card is coming to Sri Lanka more than 32 years back. And now I think with going with the new digital era, so all the banks has to mind that to come to that 50,000 rupees, because some of the banks are asking for us to increase 100,000 rupees, but we will not be able to increase up to now. And because some banks are not giving the maximum amount of 50,000 and request from all the banks to increase and come to the digital world. And as Mr. Rajapaksa said, and there are many banks are involving, but some banks are still far behind the schedule. But all the other banks, all the banks are, I think, linked with this, all the system having in this presentation. And I will move to the digitalization in the future. I think would be how we can move to the digitalization. So So in this case, I have make the bank's perspective and also the customers and also regulators perspective. With the COVID-19 situation, we know that the various data science with the advancement of the technology like a data science. So we have seen most of the data we are getting, the output we can derive is much more value added and insightful rather than having the siloed data with the traditional linear products. Then, so even in the bank in the future, we'll use to build the 360 views of their customers, not only for the compliance to regulation, but to increase the value of services they offer. So if you take an example where there is a segment of customers who are eligible for particular products or services, you can use the digital technologies to identify that customer segment and approach them with the services. So also by allowing non-bank sector services or the businesses to access bank data, so with the customer's consent, they also can introduce a new business model using those financial data. So that is a basis for open banking concept also we can discuss later. In addition to that, the customer's perspective, with the COVID pandemic, we have seen most of these activities we have done in the past for physical location has now changed to the online platform. So if you take the current scenarios, having conferences and seminars, school education, exam, and so on. So now we are using the online platform. So the people are adopting to it now, and trust is building on the online platform. I think Mr. Rajapaksa is also saying that how the trust has to be built with this situation with the customers. So as with the banking sector, earlier it was mandatory to get your passbook printed frequently, and future there will not be such need when the trust of customers is well established with the online platforms. Now the trust will not be established easily. Actually, and the customers will demand for higher security and transparency in the banking platforms. And in the future, customers will be more educated on those areas. So I need to highlight that from my experience also, some apps that have been introduced by banks are, in some cases, it is failing at sometimes, not always. When you are going to onboard some customers, it will take some time and some errors are coming. So that's the beginning of a digital era. But now I know that most of the banks are developed well, and the apps are audited by the third-party auditors, and I think will take, I think smooth operations are going on. But in generally, in some apps, so it is very complicated. When you see in some apps, it's very complicated, and most of the banking apps are having all advertisements, but it is very difficult to find how to do the transactions also. I think in some cases you need to get the help from someone to go through it and find the application, know how to onboard the customers, so on. I am not saying this all apps are like this, but take action, make it simple and easy to find the path to make a payment. So that's the most important, because customers, we know that so they do not want to spend their time more than 5 to 8 seconds to find the path. So therefore, in a minimal time, so they want to do the transaction and acquire the system. So I request from all the banks to make sure that your products are well operational and simple, so that the end customers will adopt them easily. So today's demand for banking is anytime, anywhere banking. So it is trust is built, and the system is also accessible at any time. Customers will tend to use more of the automated banking system and bank system services, and will use the limited time to manage the financial services. So if you move to the next slide, so this is a regulator's perspective. So the regulator's perspective, so with the digitalization, the emerging technologies that has not been there in the banking sector can create risk for the finance system as well as for the customers. So it is a regulator or the supervisor's responsibility to strengthen the compliance and the mitigate risk while reducing the fixed cost of compliance, which lead to improve the protection of the customer. actually to improve the service level and to maintain the trust, the RegTech will use the advanced analytics, robotic process, and cognitive computing technologies they can use in the latest technology for development of these RegTech. So that RegTech has emerged as a lifeline to help firms ease this burden and streamline the labor-intensive and costly tasks. So these solutions are aimed at making it easier and cheaper for financial institutions to comply with ever-changing regulations without requiring manual process that drive up errors, time, and headcount. So also from the supervisor side, the supervisory body, so we'll call them SupTech, can be investigative and preventive by using the technologies like automated reporting and real-time monitoring. So this is, I think, in the latest world and the digital world. And when you're doing some of the technology development, so these things also very, very important for us to study. So with the new development, how our future would be happen is the major items which also at the central bank, we also found some of the major scenarios of the development need to be there in the future development of the banking sector and the country. The open banking is one. So we can see there are promising digitalized solutions are becoming popular, and in future they will be widely used. So open banking will be a key digital solution in near future. So according to the BIS statement, open banking is a sharing and leveraging customer permission data from banks to third-party developers and also the firms. So there's a the statement or the definition given by the open banking. So if you see this left-hand side, without open banking, now customers are directly linked with the merchant or the bank A, B, or the C, other banks. The directly customer is, I think, linked. And for the right-hand side, with the instrument of the open banking, then customers are directly linked with the TPP, third-party providers. And the third-party provider is linked with the merchant and the banks or the banks. So that's the scenario we are given. So with the open banking scenario, there are three parties are involved, mainly customer, TPP, that's the third-party providers, and also banks. If we look this customer's perspective, this customer so can be divided into personal customers and the business customers as having in the normal operation in all the banks. The main benefit of open banking participated the consumer is that they can access the banking services through a well-connected platform. So now if we have 3 banks account at different banks, even though those banks provide the online banking, so we have to log into the 3 platforms to access our financial data. That's the current scenario. But in the open banking environment, so it will provide the consolidated view of our financial position by allowing a single interface to visualize our financial data, given that all my connected banks are joined with the open banking system. And it is also easy to provide guidance to optimize the customer financial portfolio. Because earlier, we know that without the open banking, each customer, the customer has to visit their website of the banks and do the transaction. The data holders is also important for the open banking as a participant. So maintain the product and the customer information of financial transaction and provides the API to be the consumer or consumed by third-party providers. So this is included with the commercial bank, a specialized bank, any other financial companies can act as a data holder. So your bank data to fintechs will improve the bank's customers based by the allowing other bank customers to apply on their bank services. So there's a, I think the facilities or the features given in this scenario. And not only for the banks, non-bank sector like telcos, hotels, and other entities also can bundle their services to the open banking platform. So that's a, I think, advantage we are giving this or having this, using this open banking, I think, environment. And the third-party provider is, I think, major concern or the new items come to the scenario, the ecosystem. In this open banking solution, we will have the entrance called the third-party provider. So who will be consuming the exposed data through the set API with the consent of the customers. So they are the ones who will provide the innovative fintech solution to the customers. So therefore, TPP is very, very important. So there are two scenarios I have given, AISP and PISP. The account information service provider. So we call it AISP. They will use the customer's account related information. And PISP, so there's a payment initiation service provider. We'll call it a PISP. They will execute payment transaction on behalf of the customer. So if you see the one of the example given in this, I think website produced by some outside party. So if I log into the account information, I can use this password, username the password, and I'm able to log into the system. Once I log into the system, so all the balances are given here, and also the account information I am having is all the bank's information are there. If with this open bank system, that those the facilities are given, and also in the second column is given, and all the transaction which I have done earlier. In addition to that, so what are the standing orders done? So that is also given. And in addition to that, there are many other benefits. So the facilities can be included for this scenario. And if you want to add another bank, this is my one bank. And if I want to add another bank, so we can able to add these things. And for example, if we want to add the Citizen Bank, so you want to use the username and password and sign it, and you will get OTP and say, okay, then your bank account will be added for the your profile. Then so you can see in that your balances in there and all the transaction you have done, and all the other bank's information is also there. And in addition to that, if you see the PISP, so there's another scenario we are talking about the open banking. And if you want to buy something from the web platform, then you can make order and payment for this one, and you can select any bank, select one bank, and you can use your username and the password and sign in, and do the OTP, make a payment. So this is how this is the open banking scenario is working. So next topic I want to touch is that AI technologies. This is also important, and Central Bank of Sri Lanka also appointed one subcommittee on that one to study the open banking. AI technology. So I think in the present situation, as Mr. Rajapaksa also said, that AI, robotic, and all the new technologies are very, very useful. If you take the core banking functions, leading artificial intelligence research institutes have found that there are many potential areas that can be optimized using the AI technology. So those research institutions have found that the best way to deploy an AI solution will be based on the use case driven approach, and it has to be accordance with the bank's capacity rather than the complete AI solution. So that will lead to the lower return on the investment for such solution. If we take the front office operation, so there are, I think that the dark blue is given some of the AI solution we may be able to give. Call centers and the customer marketing, customer relationship, such a front office operation can make using this AI technology. And also the core banking environment, retail and commercial banking, and also collection and recovery type. So we can use the open AI technology. In addition to that, back office operation, regulate reporting, and also compliance reporting, service optimization, those kind of things we can use the AI technology. According to the Cambridge Center of Alternative Finance and the World Economic Forum, so there are 56% of financial companies which they have surveyed implemented AI solution in risk management, and also 52% of financial companies implemented AI solution in revenue generation through the new products and services. So these are the background of this, the type of AI solutions we can be used for the banking sector, especially so the call center can be automated using the conversational agent or the chatbots to minimize the human resource utilization. At the same time, the personalized banking to provide the high rate of service acceptances. For example, if the customer use their bank card to book a flight, AI could help to suggest relevant personalized offers to the customers. So therefore, this AI process and the I think facilities for the given through this using this AI technology, so we can make more digitalization era for in our country. And also there are AI biometric technologies like a face recognition to provide easy and well secured login and verifications also can be used. And churn prediction mechanism can be used to test the customer satisfactory levels and predict which customer or the customer segment will leave the bank. Some areas we can allocate or find some research and do the, I think, implementation for using the AI technology. So this is very important agenda. So next item which I have selected is that blockchain technology using the shared based on the shared KYC. So central bank has initiated blockchain-based shared KYC project, which we have completed the POC testing recently. So this is also very timely initiative which we have introduced on the digitalization journey. So there are many reasons why the banking sector is moving in future to the shared KYC method, which are advanced using immutable technologies like blockchain. So we know that there are many challenges are having with using the existing KYC process. I don't want to go one by one with the time concern. So since still we are using the paper-based manual methods, the time, cost, and the customer workload is much higher in the existing onboarding method. It's difficult for the customers as well as for the bankers. From the customer side, he or she has to spend much more time on filling the forms and the documents. And there are no standard level for the agreed format by all the institutions when it comes to the onboarding. So bank to bank, so the financial institution to institution, so it is changing. So therefore, customer and also the bankers also facing some problem. And even though the initial KYC process is completed, the updating at any instance is much more cost and labor oriented. Once you fill the forms and if you want to update some KYC process, then of course it will take some time and it will not happen. So therefore, I think there are many challenges are there. So with these challenges, we have identified this requirement of this use of this shared KYC process. So we call the POC, and it is, I think now the POC has in last month, 30th June, and now we are waiting for the report, and all the banks, the 12 banks are supported for us to develop this KYC process of a POC. Then, so thanks for the banks to join with that, and we are waiting your report on this one. And so these are the benefits given taken by the regulators' perspective and the banks, and also customers. Customers also enhance customer experience and convenience for using the shared KYC, and also it will control over the personal data. On the bank's perspective, the bank sides, since it is a digital and shared method, the cost and the labor will be reduced. And so when there is a chain KYC data in any bank, other parties of bank will get the real-time updates. So those are the facilities and the features we can use once it is established with the shared KYC. So next, digital agenda. So what I am thinking in future is a central bank digital currency. We have started this project in 2019, and we submitted the report to the top management, the requirement of this CBDC. And especially the central bank digital currency, actually we define as a digital banknote or an electronic equivalent of cash. So this can be also be considered as a main digitalization tool when it comes to the banking industry. We know that for the past few years, there has been a growing interest of cryptocurrencies and like Bitcoin, and I think that sessions has gone through. Mr. Poon has done that one, and so they have gained a lot of popularity because of the decentralized and the regulation-free nature. These kind of unregulated cryptocurrencies are possible threat to the traditional banking system that operates under the purview and the control of countries' regulatory authority like central banks. So therefore, we have seen the continued launch of new cryptocurrencies, which has also raised concern about the possibility of scams and the hacks, which earlier, I think, presentation also explained. And with those reasons, so many leading central banks across the world are working on or researching about launching their own versions of cryptocurrencies. These regulated currencies are called central bank digital currencies and will be operated by the respective monetary authority and or the central bank of the particular country. So what would be the actual need for introducing the CBDC is depend on the respective country's requirement actually. And a digital form of money can be used to reduce the use of physical cash. Then we know that the cost of printing and distributing of physical cash is at a considerable level to a country, and it is a high cost for using the currency. So to increase the financial inclusion in the country, so where there has a low banking penetration, CBDC can play a major part of that role in that particular country. I think we also can use the same. So there is a threat to financial system because of the price volatilities of the private currencies like cryptocurrencies, and they are more likely to of an asset rather than a payment instrument. So mostly they are using as a asset instrument than the payment instrument. So the risk from the using private cryptocurrencies can be mitigated if you are using the, or if you can introduce the CBDC in future. Also, since there are a digital form of money, they can be programmed, and so they will be able to fast and cheaper retail and the cross-border payments. CBDC are an efficient payment instrument, not only because they are in digital form, but also the time to settle happens within the very quick or very short time, and they do not require any manual process of documentation. Actually, CBDC can mainly divide into two parts, retail CBDC and the wholesale CBDC. And retail CBDC is issued by the banks to the customers or the people, and the wholesale CBDC will be issued by the CBSA or the central bank to the banking community. There are a few examples are given here. I don't know, take much more time. The China, some promising CBDC projects in the world, especially in the China. So they call it digital yuan, and it is in the pilot stage in the major cities in China now. And the objective of introducing CBDC is to gain the control over the payment ecosystem from private payment service providers, which are mainly the private and the cryptocurrencies. In Bahamas, so they have introduced Sand Dollar, which is live project. Their motivation, so their motivation is to improve the financial inclusion among the 700 islands. Small, there are many islands are there. Then they seen rather than establishing the physical banks or the ATM in the 700 islands, I think it is efficient to introduce the digital currencies in the countries. Therefore, they introduced in Bahamas, they introduced the digital currency. So Cambodia has also introduced the CBDC to strengthen the reliance on the Cambodian real and to reduce the dependency on the US dollar. As the recent news, Vietnam Prime Minister has instructed the country's central bank to develop the virtual currency based on blockchain, using the blockchain within the next 3 years. There was a research done by the BIS 2021, and they have found that 86% of the central banks are actually researching on CBDC, and 60% of the central banks are experimenting with CBDC related technology, and 40% have advanced to the pilot projects. So there's a video is given. Sorry, So what we can learn from this one is that if we implemented our Lanka QR in all over the country, then it is easy for us to use this digital currency in future. So that is what I want to give the news from this, I think, from the site. And so we'll move to the last few slides, which we have make it. So digitalization in banking, how future would be. So at present, you have collected all the data. At present, we are having more than 5,000 branches of licensed banks and non-bank financial sector in the country. And nearly 19% of the branches are in Colombo district. Together, 987 branches are there. And nearly 29% of branches in Colombo and Kampala district together, and more than 1,400. And 34% branches are in the Western province. So compared to, I think, population density and also the branch-wise distribution, is you can see using this map all the non-bank sector and also banking sector environment. So with that, I think now we have to think of the where we are going. Is that now most of these I think other countries using the digital banking platforms. I think we also want to think on this one, how we are moving ahead and what are the next step of getting for this digital banking environment. So we call it the branchless environment in Sri Lanka. So if you have the practical problem in going ahead, you can the contact central bank or like a supporting some of the trust we are having on the digital banking, the formal so digital banking environment. We get this Singapore, Malaysia, South Korea, and other Hong Kong and some other countries. We have seen that most of these places already, so they have developed and give the license for the digital banking. So we also want to think on what's our next step is that where we are going. So digital banks offer the same banking services as traditional banks, but operate without physical infrastructure. So in future, also that the way forward, we can try our own products and opportunity. This is my own thinking. And so what I have seen is that the last year, especially with this COVID situation, that so when the banks want to develop some of their apps or any apps or the development taking place, then if they offer for the, if you're noting, I think if you're not using our own product, then of course we have to offer to the other countries, maybe that it will get late on some cases and it's delayed, I think, production and launching also. And also that even though we have introduced many developments and the instruments for the payment system, the public awareness is the must. Then I think we have last year, that's a reason that Central Bank of Sri Lanka has announced this digital transaction year. And also we want to build the trust for the customers, as Mr. Rajapaksa said earlier. And introducing and shifting strategies for the customers is also important. What's the next level and how customers are onboarding and give the trust and awareness and everything for the to go for the next step. And a digital ID is also important for the country to implement each and everything. And we also want to focus on how everything is going with this, and we have to look at when we are moving forward, going digital and going green with the digitalization is my the word or the news I can give to you. Thank you very much.
Thank you, Mr. Kumaratunga. Now the forum is open for questions, Q&A session. Mr. Jeremy Dizilla will moderate. Jeremy, have you got any questions?
Thank you very much, Christine, and thank you very much, Mr. Kumaratunga and Mr. Senaratna for that elaborative explanation on the digitalization and the cryptocurrencies. In terms of Mr. Kumaratunga, I just want to put this question on your side. In terms of the technology change and the digital landscape of our country. Now, our culture in Sri Lanka is a little bit backward in moving towards the digital side. So how are we going to create that awareness, and the banks, especially the financial institutions, get that connectivity with the customers? What are the things you see that should be done from the bankers per se for the connectivity in order to improve the digital landscape?
I think the most of the sectors at present, almost I think all the banks are joining the digital landscape, and so in some banks we know that they came late. And for example, when you are introducing the SIFT in 2015, then some of the banks, I think few banks joined first, and later after we push in all the banks, I know that I think all the banks are, I think, knowing that how many meetings we are having each month with the banks to onboard or the using this scenarios for the instruments. So it is so very much difficult at the beginning to introduce some of the products for the, especially for the banks first. Then because in some cases, when we introduce some new products, Lanka Clear or Central Bank, then at the initial stage, so if the banks are not recognize the importance of these digital products, then so it will get late and it will impact directly for their customers. Then I think so therefore in our duty is also that educating and given some background and also importance of these digital products. And for the customer's perspective, we know that so even though banks are having all these digital products, then so next step is that our difficulties with the banks and the central bank is that how these products are moving towards all around the country. So that is there. Then so I think awareness is a must, and we have to spend a lot for the awareness for the customers. And so first of all, I also want to think I identify the early stage. Before we are moving towards this our normal customer base, so we have to give awareness on our own employees. So that is what we have started last year. And in many cases, I have seen that when we ask some of the banking apps with some of the employees in the banks, then in some cases they don't know their apps also. Then so that's why that the digital transaction year started last year. And first 2-3 months, what our target is that giving the education or the level of some knowledge or the awareness session for the own banks, on the own employees. So this one we have started in central bank also, and we had the educational session and also customer onboarding session in the central bank in last year, March. So the main theme is that given some education and to level to the digital payment of the staff of our employees, the staff of our CBSL, then at that time, so they realized there are many apps in the market, and these apps can be used for many transactions and makes any utility payments and so on, and money transferring. So likewise, then of course it is easy for us to bring this message to our all around the country and other areas of the country. So we have to focus, and I think we have to have some target to introduce these digital payments for all around the country. Any part I have missed you? Please repeat that, Tony.
No, that's quite clear, Mr. Kumar. The area is now in the terms of the regulations. Now, in the payments and settlement, there are certain regulations that the central bank has issued where conformity by the financial institutions have to be aligned, because now one area is the data security. Because now when we go on a digital platform or open banking platform is how the data security, because most of the network connectivities that we have, maybe the security aspect is a concern for the banking as well as the central bank also. There is no direct broad guideline on how the protection, because customers are concerned of that part. Is there any thoughts that you can share, Mr. Kumathung, on that side?
Data security, that's a very, very important sector. I think if you are using this or sharing data with the TPP, with the open banking environment or any other, the current banking environment or I think the instruments which we have introduced. So that is very important sector, and I think at present all the banks, when they are launching any products, I think within the bank also they have the compliance and the risk team. They also looking on that one, and your own IT areas, IT sectors also looking on that area. And I think testing, beta testing or whatever, when you're doing the selected vendors, so they are also concerned on this one. In addition to that, CBSA laws, especially from the payment and settlement department, we issue the minimum compliance guideline for mobile payment system. So I think it has covered more than 26 areas, and I think in between that 26 areas, there are many subsectors, more than 150 sectors has to be complied with this minimum compliance guideline. And also each and every sector or the product or the instruments, when you are before launching, we know that in our requirement is also that we have to do this third-party audit and get all the 26 compliance sectors and submit it to your board and get the approval and inform to us. And if it is some sectors are not compliant, then of course we have to reevaluate or redoing this, the third-party audit. I know it is very, very costly, but it is a safeguard of the customers.
Thank you, Mr. Kumatul. Mr. Senat, one question on the cryptocurrency, because this is much more widely used. But of course, we see in Sri Lanka, there are people investing in cryptocurrency, although still the central bank has not directly given any guideline or anything, but we see there are individuals who invested. Now, how would that impact our economy? Is there going to be any impact directly on our economy, or is there going to be any impact on the benefit or disadvantage the investor side? You're mute.
Right. Okay. So the impact can be broadly categorized in two levels, right? One is, if you remember, I dedicated one slide to this, the risks to users as well as the challenges for the economy, right? So definitely there will be user level risks, price volatility and things like that, and obviously the technological risks as well as scams and things like that. So losing your hard-earned money is a real is a possibility if you fall for these traps at the user level. But your question was, I think, focused on the economy level. At the broad economy level also, there will be huge risks, like if you remember the economic statistic preparation, the monetary policy, the price stability concerns, the taxing issues I discussed about. So these are some of these risks that are at the national economy level. Yeah, and also like now let's say another important aspect is how the existing financial system tries to integrate with this alternative virtual economy, right? So when that integration happens, how much existing institutions like banks and other non-banking financial institutions become exposed to the crypto world, right? So how can a price volatility in the crypto world can have an impact on a bank, to which degree? So that part will definitely be regulated. And in terms, in fact, actually, there are a lot of discussion going on, especially at the international level, where, I mean, if you think about some US investment banks like JP Morgan have already opened up their portfolios for institutional investors to invest in cryptocurrencies, right? So that at that integration point, there will definitely be some kind of a regulation as well as a risk. So that risk has to be evaluated, and measures have to be taken accordingly in order to avoid that any risks posed by this price volatility and other crypto specific intrinsic risks that are there in the crypto world. Right?
Yeah, the other thing is that the most used cryptocurrency is the Bitcoin. Now, there was a question on the chat forum whether the Bitcoin in the usage of Sri Lanka, how would be it given the market sentiments or how it will benefit. I think in some of the presentation slides you talked of this, the main currency that is being traded globally. The chat forum had a question on how it can be used in Sri Lanka. Any views on that, Mr. Senratha?
So the central bank's position has been that we still identify this as a very risky area, like we have elaborated in our press releases also. So the position is that we do not encourage people to go in this direction, as shown elaborated in our press releases. Right.
And I want to add one more thing, Mr. Purna's comment. So we appoint the committee for looking for this, how we can regulate, or what are the decisions we can make, or what is the central bank opinion on this virtual currency environment. And now the committee has actually one committee has appointed, and they have submitted the report to the management. And so next committee appointed to, I think, take a decision on we can see, or the what kind of regulation, or the what kind of a news we can make it for the nation. So that is what at present we are doing that one, and within next 2-3 months we may able to, I think, get some decision on this one. At present we are in the process of looking on the process of this cryptocurrency.
Yeah, thank you, Mr. Kumar. One more, there's another question. In blockchain arrangement for shared KYC, how would the report submission be done to the regulator is planned? And could the central bank take the reports separately? That's one question. Any thoughts on that, Mr. Kumar?
I think this. I think the question is asking for the POC reports.
Blockchain,
maybe.
yeah, in the blockchain arrangement, yes.
Yeah, at present, the 3 vendors we have selected out of 40 vendors, those who have submitted their willingness to support for the as a national project. This is a free of charge, that the project we have given and implemented. And so POC, I think report will be submitted each and every bank. Those who are, I think, connected with the 12 banks join with this POC. Then we are waiting on that, and most probably within the week time we'll be able to get all the comments and the observation of all the banks. And very importantly, we have to get these vendors comments also, how it is happening and what are the areas you want to develop, what are the lagging areas you want to check, and the what are the, I think, deficiencies or the improvement side that we want to make it, and how security wise it is we want to look, and those areas need to be, I think, given by them, that mainly from the vendors as well as from all the banks, those who are joined with that. So I think within the week or the 2 weeks time, we will be able to get that.
There's another question also on the chat forum, Mr. Kumar Dunga. Is central bank planning for centralized digital currency like PayPal, or decentralized as blockchain? Any thoughts on that?
The PayPal, I think PayPal is a different entity, and there's a different platform. And last 8 years, we tried to make it happening for the Sri Lanka. And actually, yesterday also, I had the conversation with the relevant authorities for the PayPal, and we are in the positive sign to get that facility to Sri Lanka. That's number one. And the other one is what's the next point, Trace?
Or the decentralized as blockchain. If you decentralize digital currency, what is asking is whether there would be as blockchain any decentralization of the currency, digital currency.
If it is a CBDC, then of course we have to get the experience, especially from the developed and the other developed market, and especially who has implemented those in. We know that at present Malaysia is also working, and most probably Singapore within this year they will issue the digital currency, and India is also I think appointed the committee and they're doing the research on that. And other countries, more than 86%, like the most of these central banks are researching and doing and implementing, and so they are involved in with this CBDC. And as I said, that China is almost there. And then so with this I think experience, we want to look how it is work, and doing the same in future in Sri Lanka. So I'm thinking on that, and anyway that we have to get the relevant approval on that one. This is a concept at present.
Mr. Kumar, is there any timelines for these projects to be rolled out, the open banking, decentralized or the KYC project and all? Is the central bank looking at any near future project timelines?
Actually, for the open banking, so normally it's take 3 to 4 years for the other countries. We are doing start now because we have started last year and appointed the committee and they have submitted the report last May. And now we are working on that, and internally we have appointed another committee and working on that. And we want to get this all the bank support for this one because I know that bank itself having I think experience and knowledgeable staff. Then of course it is easy for us to go in with you and include the Lanka Clear and all the banks and other financial institutions also can contribute to this project. And at least 3 years will get to achieve this target. In some cases, we need to have this Data Protection Act. That's a main thing because the TPP cannot be shared with the customer data cannot be shared with the TPP, or customer data cannot kept with the TPP if we don't have this Data Protection Act. So it is also on the way, maybe that Data Protection Act. Then of course after that, and digital IDs is there very, very easy for us to, I think, move forward this project. And shared KYC, of course, I think within next year or maybe June next year, then of course we will be able to implement that if the relevant approval has obtained.
There was another question now. If Sri Lanka implements a digital currency, whether it's going to be transferable in and out, or whether there are going to be any barriers being implemented when we implement a digital currency?
Yeah, everything is same. When we asked the blockchain, the name blockchain 4 years back, we also afraid on that one, and this is new thing for us. Then and no any banks want to involve with the blockchain. So that's why Central Bank has started that one, and we try to test that one and get some knowledge and experience how it is work. Then likewise, the CBDC is also same that last 2 years, some companies, I think we had the discussion with them. And so at present they are working with the other central bank in the world. Then so we don't want to go first for that one because it's the thing is that the mobile phone penetration, especially smartphone, need to be there, and also it is very, very easy for us to go if we have the QR code implementation. It is same as a QR code. Then if we move towards this QR code implementation all over the country, then next step is very, very easy going for this CBDC.
Right. Thank you, Mr. Kumar. Thank you, the audience. I think the time is catched up in the presentation. I now conclude the Q&A session and hand over to our CPDC chairman to do the final conclusion of the event. Thank you very much, Mr. Kumartunga and Mr. Senator, for your participation.
Thank you. Thank you.
Thank you, Mr. Kumartunga. Thank you, Mr. Senaratna. Thank you, Jeremy. Yeah.
Thank you, Mr. Kumartunga. Thank you, Ms. Senaratna, and Ms. Christine, Ms. Jeremy, and all the the CPDC committee. Finally,
Thank you. Welcome.
Thank you.
Yeah, we have come to the conclusion of yet another important webinar. Though it is the conclusion, it is not the end of the tunnel. There is a lot more to do and a lot more to learn. Maybe we'll have to have another session like this sometime later. So let's appreciate the contribution made by many individuals who were instrumental in making this event a success. Firstly, Mr. Kumartunga, thank you very much for your effort and time spent on educating us, the bankers, and the audience who joined with us today. We had an audience up to the brim. The capacity was full. There were many waiting in the lobby. We could not accommodate. So it shows how important this was. Anyway, we'll see how we can accommodate them in a later session. Mr. Purna, I'm pretty sure you were able to share your in-depth hands-on experience with us today. Very useful to tread on the journey safely. Thank you very much for finding time and making that extra effort to educate us. Thank you once again. Mr. Jeremy Dizila, my dear colleague, a big thank you to you for moderating the Q&A session so well. Thank you once again. Along with you, I must thank the team members. Not for you, this session wouldn't have been a reality. Thank you and appreciate very much the team effort of CPDC, namely Mr. Jeremy, Ms. Anjali Gunatilaka, and Mr. Asita Pinnadu and Mr. Isuru Davira. Thank you so much. I must place in record the support extended by the President APB, members of all other subcommittees, the council members, the secretary at APB office, and the advisory panel. Thank you, dear colleagues. Thank you so much. Thank you, Daily FT. We cannot forget you. You are always there to support us. Thank you, Council of Advisors, for always guiding with your invaluable guidance. You are a pillar of strength to us, the council members. Thank you. Thank you, Mr. Tusita at OS2 Works, for arranging this webinar in such a wonderful manner. The most important cog in this wheel, of course, the audience who joined us today. Thank you. I know you were waiting and lot couldn't enter. Some were watching on the YouTube. Thank you very much. A very big thank you to you goes out to you from our entire team. Thank you so much for spending more than 1 hour late, 1 hour, more than 1.5 hours almost, late into the evening with us. Not for you, all our efforts would have been a futile match. Thank you for everyone if I have missed to name here. And let me say good night and be safe until we meet again. Thank you.
Thank you. Good night. Stay safe.
Good night. Thank you. Stay safe.
Thank you very much.